Okay, let's welcome on board then Hemang Jani and figure out what he's making of the market temperament right now. Hemang, hi, good morning. Great to have you on the show. Hemang, just wanted to understand what explains the fall that we had in the railway stocks yesterday, given that most of these stocks are sitting at a 52-week high, extremely robust commentary, order inflows. Is it just routine profit booking, you think?
Good morning, Aisha. Thanks for having me. I think when we look at the market, I think broadly there is a lot of resilience strength, which is also backed by some amount of FI flows. But you would see certain amount of rotation within the broader market. And when we are looking at the mid cap and the small cap categories, whenever somebody decides to rotate, from X to Y, there is going to be a certain amount of impact, and it's going to be crucial for the investors or the fund managers to do that rotation. So the correction that we saw in the railway stocks or certain pockets is essentially driven by that. I think the fact remains that given the way the government has gone about giving orders on the railway related items to various companies, I think that process is likely to continue over the next 2-3 years given the size of that. I do not see much of a impact in terms of the fundamentals or the growth, but it's more of a short-term tactical profit booking that some investors may have chosen to do.
Right. And if these stocks were to fall further, Hemang, would you recommend buying the decline then?
Yes, I think railway stroke defense, some of the good PSU names surely present a great opportunity. And railway in particular, because of the, this entire Vande Bharat and the expansion of the fleet, upgradation of the infra, I think that itself is a very big opportunity. So I think BEML and some of the railway stocks surely present good investment opportunities for at least 2 to 3 years.
As well, while of course today we are waiting out for DRL as well as L&T, amongst many other earnings which are slated, Escorts, etc. But earnings reactions coming in for Lupin. The Q4 results have been above estimates. The US business margin has actually improved for a third straight quarter. Pharma clearly seems to be getting their mojo back. Apollo Tyres as well. The margin expansion has been a good 480 basis points, and the EBITDA as well has seen an uptick of nearly 59.5%. So this is going to be another stock to look out for. And then, of course, there's SRF, there's SCI, which is going to see an earnings reaction, Nazara Tech, which is going to see an earnings reaction. Even Eveready actually has posted decent numbers. The losses have contracted now to 14 odd crore rupees. That said, Hemang, just wanted to understand what you're making of the oil sensitives, because clearly the crude dip is now playing out. You've seen the margin performance come in for most of these tire names. Is this the space that you recommend being invested in?
Yes, surely. I think the crude correction in the last, let's say, a week or so has definitely played an important role. And one has to reckon that despite the aggressive production cut that some of the OPEC members decided, the crude has really failed to go up and in fact has started correcting, which is definitely a good sign from India perspective. Having said that, what we must understand is that crude oil and many such raw material or the variables are very dynamic in nature, and large part of the benefit in terms of the raw material prices or margin improvement would have already got reflected this quarter. So to stretch this further would be a bit of a risk at this stage. For example, Apollo Tyres reported good performance with a slightly better margins, but the incremental growth will only come from the volume story and not necessarily from the raw material price correction or the margin improvement. So we have to play this a little carefully from here on. But I think for some pockets like maybe oil marketing companies, paint companies, some of the cement companies, I do think that this crude oil price plays an important part.
Okay, let's move right on then. And stocks on the editor's radar. So today we've picked out two sectors. We'll start off with the paint stocks and then we'll move on to some of those PSU banks. Let's begin by talking about paint stocks because Morgan Stanley, Nikunj, has alluded to the fact that there is going to be a rise in threat from competition and there's going to be a threat to their valuations as well down the line.
See, what was the Indian paint sector? The Indian paint sector had 4 large players, one sumo player and 3 other small players. The sumo name was Asian Paints, and then they had more than 65% market share. The other players had less than 5%, 7% market share each, and that really has been the trend for about 10, 12 years. The sector was growing at 12, 13%, 15% in a good year. These businesses were growing without raising a lot of capital. And when you have growth and when you have market dominance, you obviously enjoy a premium P multiple. That is the story for Asian Paints. Guess what? That dominance of the sumo is now getting challenged by another sumo group called Aditya Birla. If that was not enough, Pidilite, who was in the same business in home construction, has the same network, is now entering into the paint business, which means that there is a large corporate group who's going to be challenging the incumbent, and there is a home improvement company, Pidilite, who understands the supply chain, has great relationships with the dealers and with the painters. Now is going to be coming up with a paint as a category. So this category will see dramatic and disruptive changes, which means the haloed P multiples, what an Asian Paints or a Kansai Nerolac or a Berger has enjoyed, that will challenge. The sector will grow, but not everybody will grow. There could be a price war here, and there could be a challenge to the P multiple. P multiples are always supreme avan when markets are convinced that growth is going to be internal and that brand will never lose its mojo. That is changing. That will change. And a year from now, 50 times no, 31 times no, 51 times no ways.
Okay, so Pidilite, Grassen, they're really going to change the game with the competitive intensity, especially when it comes to valuations. I'm sure everyone was curious as to what happened to those PSU banks yesterday, because they were the top sectoral losers in trade. Put your finger on any of those names and they did come under pressure. Now, a lot of these companies like Canara, BOI have indicated high ECL provisions, and this is going to be a bit of a threat as well down the line.
What is ECL? Expected credit loss. Expected credit loss is something which banks, they normally bake in when they're talking about a forward-looking number. Markets from the PSU banks were anticipating and they were assuming that the expected credit loss would be in the range of about 1% to 1.5%. Canara Bank has come and poured cold water on that assumption. They are talking about 5%. Now, Canara Bank is a big bank. They've got a good book and a sizable book. When they're talking about 5%, it just makes you wonder that our brokerage is very conservative in terms of the assumption for the ECL losses for PSU banks. And PSU banks have enjoyed such a nice rhythm. Last 2 years, nothing has gone wrong for them. Everything has gone right for them. And this is really the moment of reckoning where the assumptions on the credit side are not getting challenged. I think it will not impact private banks per se, like an ICICI bank or an HDFC bank. We know their disclosures and their forward-looking comments are very strong. But because of the assumptions what brokerages had in the SMA book, SMA half book, that's a technical term here, these banks will have to, the earning assumptions have to be revisited. And that, I think, in a sense, is really set the cat amongst the pigeon, if I may say so. The downside will not be large because they're still very cheap and credit growth is strong. But yes, in the near term, the momentum has got pricked. That's my limited point.
Yeah, and we saw that reaction clearly play out in yesterday's trade. So there you have it, Aisha. Stocks on the editor's radar.
Oh yeah, absolutely, and a whole host of them. Hemang, wanted your opinion as well, just taking a leaf out of what Nikun said about PSU banks, as to whether or not you think that they're going to outperform just as they did last year too.
So Aisha, two things I want to share here. One is that the performances this quarter have been very good, both PSU and private banks. There is a sense that the NIMs could go through a little bit of pressure over the next 2-3 quarters, depending upon how the interest rates go. And some people also have a concern or doubt that this was the peak in terms of the earnings growth, and the sector is over-owned. So I think when you have these kind of concerns, there might be a period where the banking would go through some sort of underperformance or a correction, which is very much possible. But I think, given that the sector had already corrected a couple of months back, the valuations are not out of whack, or the consensus growth that the market is expecting is also not too aggressive. So any correction or a consolidation would provide a great opportunity, be it some of the PSU banks like SBI, BOB, Canara, or something like ICICI Bank, Axis Bank. So I think there is going to be enough and more interest around it.
Discussed this one before, but I want to revisit the ONDC impact on Zomato, on Swiggy. Hemang,
By the way, it seems that their website is down because there was suddenly so much traffic. There's a technical snag.
that's typical startup
Yeah.
issue, so to speak. In fact, I was reading an Economic Times report this morning. They are talking about high volume, but everything was in a sense centered around the local kirana wala or the food delivery. So that's how experimentation phase will start. One basic thing, Aisha, is that the objective of ONDC is to increase the reach of e-commerce, and it is a non-profit platform. So in terms of advertising, in terms of making it stronger, in terms of commission structure, a lot will change now. I mean, this is at a very evolutionary
Nascent
stage, so to speak. Hemang Jani, did you order that burger on the ONDC network? Everybody in your office, I know they've been ordering burger and pizza, some ordering both.
Yeah, I think.
When did you order, Monday or yesterday?
Nikunj, I prefer khana. Okay.
अरे भाई
I'm
ठीक है,
not
it's
too
okay. Your
much.
wife is not watching. I know. I mean, a lot of my friends in Motilal Oswal have ordered burgers. I was speaking to them.
Yeah, sure.
It's okay if you admit it. It's okay.
Party food.
No, Kunal though has gone home because when he ordered at office, it didn't come. So घर पे खाएगा जो जा करके.
Sure, Nikunja. So I think this ONDC has become a buzzing word in the past few days, and my take on it is that surely it will have some risk for the incumbents like Zomato and Swiggy, because the entire ecosystem under which ONDC is operating is free ecosystem where you give better pricing to consumer, you give opportunity to the smaller players, and most importantly, the advantage that some of these companies have, Zomato, Swiggy, on the client data. That data advantage goes away once ONDC comes into play. But what is very critical, Nikunj, to understand is that at this stage, does it have the enough scale to really create a big disruption? We don't think so, unless there is enough traction in terms of client base. They expand categories, grocery, and many more. We don't think that this particular issue is going to be too big in terms of the impact. But since the market is far more sensitive, it has already started pricing this in. And as we see incremental data over the next, let's say, 1 or 2 quarters, that will clearly suggest what kind of impact it would have. We have an extremely positive view on Zomato. We just did initiating coverage report, and we think that that market size is big. And once the company achieves a certain operating profit level, the overall growth can be extremely high. So we are not disturbed by this ONDC phenomena as yet.
Okay. Zomato, in fact, has seen almost a 12.5% move in the last 52 weeks. From those 40 odd levels, it's made it back to almost 61 there. But how can we not talk about Mankind Pharma? What a dhamakedar listing this one turned out to be. An issue price of 1,080, and straight away it shot up 1,300 on opening. And from there, it only climbed up higher, almost 32 odd percent. 1422 is where it shut shop yesterday. But Hemang, unfortunately, not everyone got the allocation. What do they do now?
Aisha, the fact of the matter is that retail category was undersubscribed. So whoever applied in retail, they got surely what they wanted. But yes, I think, the way the listing happened and post-listing, the way the stock ran up definitely was a bit of a technical factor also, because typically what you see is that the guys who've got the holding or the allotment in the retail category, they tend to exit because the stock has got a good listing. And the anchor investors, by the way, who got much less than what they wanted, because the overall holding would be very small, they want to really, get more once it lists. And when you see the momentum, they want to really chase it up. And the floating stock for this is extremely low because, promoter holding is very high, almost at about 75 odd percent. So my feel is that since you are seeing this kind of an excitement around an IPO after a long time, people would surely want to have a pie of it. And any correction that you may see, I honestly don't know how much will it correct and when, but surely it presents a great opportunity for investors.
Yeah, I stand corrected. Retail was indeed undersubscribed. But then, Hemang, do they buy it at these 1,400 odd levels?
I think, Aisha, for those who are playing a momentum game, surely it makes sense to participate, because when the stock reaches a certain high level, low floating stock, that's a classic case for momentum players. Surely they should participate. If one is really looking to buy for investment, I think it would be prudent to wait for some dip. I don't know how much would it be there, 5%, 7%. But this looks like a very clean, unique domestic pharma opportunity. Valuations are slightly on a higher side now that it has already gone up by about 25% odd. But surely it deserves a pie in the portfolio of some of the large investors.
Nuresh, once upon a time we did discuss Century Textiles, and I'm looking at the data here. It yesterday closed above the 200 DMA. It was a breakout stock. Is Century Textile looking strong? Is it looking good for more, Nuresh?
So technically, over the last 3-4 sessions, the stock has given a breakout, good momentum seen out here. So the move has been surprising. After quite a long time, the stock has been in the downtrend for the last almost 1.5 years. So this is the first indication of a bottom being in place. So it's just that it's moved up 10% over the last 4 sessions. So the risk reward is not great. But any dips back to 720 would actually 720, 730 would be an entry point. Technically, volumes are also good over the last 4 sessions. So generally, a price volume breakout indicates that the bottom is in place and we could be slowly trending up. And we've seen that happen with a lot of these names which have a real estate component to it. So looking at Century Textiles, but missed out on the move, we'll be waiting for dips here.
Hemang, where is Bajaj Finance headed? It cracked because of high valuations, popped right back up post numbers. FIs are back. Do you think this is one stock which should come back on everyone's radar?
I think, Nikunj, NBFC as a theme or sector is back in the reckoning. And now that the RBI has put a pause on the further rate hikes, globally also you're seeing that at some point the rates are going to, at least further, there's not going to be further hike. That bodes extremely well for the NBFCs. But within the NBFC, I think, names like Bajaj Finance or some of the auto financiers, M&M Finance, Chola, I think these are the ones where we are seeing good traction in the business. When you look at the business updates, quarterly numbers and the outlook, they are sounding far more optimistic. I think the housing finance, NBFCs would go through a little bit of a stress, because there's a sense that, the rate hikes have been more than 200 basis points and the margins may not be looking that good. So I think we'll have to be a little more selective about which pocket are we getting into. But surely NBFC as a space will do extremely well.
Morning. Wanted to also understand your take. We were just talking about stocks on the editor's radar and paint stocks. That's an interesting space given that now things are likely to be challenged with the competition intensifying. Do you think that those lofty valuations now are likely to get challenged and that Asian Paints is going to see some serious competitive intensity and, of course, some of the other players within the space? Hemang, that was for you. Paint stocks?
Yeah, sure, Avan. So my take is that already this is known that you will have a very serious contender who's going to go out aggressively in terms of putting up capacities, pricing, so on and so forth. So there is going to be some moderation in terms of the growth that some of the large players would have. But we have to understand that this market opportunity is too large. So yes, there will be certain amount of correction in terms of the valuations or the overall growth that the market is building in. But I do not think that this is going to be a big issue for players like Asian Paints or some of the Kansai, Nerolac or Berger. But I think the sector will go through a little bit of a PE correction in the near term, maybe 6 to 12 months. And we should avoid aggressively buying into Asian Paints at this point of time.
Kunal, Indiabulls real estate. The back of the stock was broken yesterday.
Yeah, Nikunj, and I think it's been one of the few stocks which I have not traded since quite some long time. Indiabulls real estate, Indiabulls housing finance, these stocks have actually lost their mojo in terms of the credibility of uptrend. They're so much susceptible towards news flow surrounding them that it's very difficult to carry position and hold them for a longer period of time. Same is the case with Indiabulls housing. The stock has been a classic underperformer both phases of the trend, whether in 2020 lows where the markets and the housing finance space recovered, or whether it's the phase of the last 4 or 5 months or the correction which started from December 2022. I think in both of the phases, the stock has been a big underperformer. So I'm not too much of a fan for these two names specifically. So typically tend to avoid trading as well as looking at the charts for both of these names.
Hemang, let's understand the spirit of the NCLT order yesterday. It's a delay. They've asked for more clarification. It's not that embassy is pulled out and the merger is not going through. So it is a matter of maybe months or quarters, I don't know, but the merger will go through. Isn't this a good entry point for somebody who wanted to buy it, because soon it will be an embassy group company?
So Nikunj, this company and certain stocks, there is certain amount of uncertainty, and if you see the track record, you do see certain surprises which raises doubts on the corporate governance and what kind of news flow can come through. So I think for investors who do not like these kind of surprises, I would certainly think that this stock one should avoid. But yes, for a certain category of investors who are high beta and who are looking out for certain opportunities because of this kind of news flow and correction that you see in the stock price, it may present opportunity. But as I said, the entire space, this housing finance, etc. Anyway, because of the way things have panned out, people are not too excited, and then you have this kind of thing. And when you get into some sort of a legal, issue, Nikunj, it's very difficult to put a time frame. We cannot say with any degree of conviction that this will get, solved in 6 months or 10, 12 months like that. It may just, stretch itself out. So I do not think it's a great idea to really buy because of this.
Okay, meantime, wanted to get in a technical take as well on some breakout stocks. And on the charts, Kunal, what does Tata Communications look like? And we also saw Birlasoft. We had the management, a pretty strong set of numbers, and that stock saw a very heady reaction.
Well, Tata Communication is interesting because after yesterday's breakout, and it was a very strong breakout for a stock like Tata Communication, which tends to move just about 5%, 7% on an average for month or 3 months, on an average. That's the kind of a low beta performance the stock tends to exhibit. So yesterday's breakout was quite interesting. It managed to come back towards a 3 month, 4 month high, breaking past above the previous resistance of 1280. Volumes exceptionally strong. And I think, with the kind of candlestick pattern shown yesterday, it indicates that there is a new wave of change for change of trend for Tata Communication in terms of the trends. The cup and handle pattern targets for Tata Communication comes closer to 1380 to 1400 marks. So I'm expecting at least another 80 points to 100 points upside in the next 1 month for Tata Communication. Birlasoft, on the other hand, could be intriguing because after yesterday's price action move, it's actually come back into an overbought territory on the short-term indicators. So it was not as if that the stock suddenly saw momentum on the upside. For the last 1 month, I think from the start of month of April, the stock was at 255, gradually moved towards 285, and then from 285 yesterday, the stock jumped up to 305, 310 marks. So the move was already baked into the prices. I believe now the risk reward is a bit more stretched to initiate a fresh buy for Birlasoft. So I'll wait out for a correction. But for Tata Communication, I think it's a very good buy on dips, expecting at least another 80 to 100 points on the upside.
All right, let's get a closing comment from Hemang. Hemang, nail it down to your high risk, high return idea.
So Nikunj, in terms of the mid cap names, we have been liking something like PTM and Zomato that we had already discussed. I think these are high risk, high return ideas for sure. I think Mankind is something that would present great opportunity for the momentum players. You might see a little bit of swing or volatility, but surely it looks like clean trending story at this point of time. Apart from that, some of the numbers that were good, I think one can really look at SRF, where the chemical business, performance was extremely good. And as I said, some of the NBFC companies, Mahindra Finance and Chola are the ones that we've been liking at this point.
Well, Hemang, thanks a lot for that. Now,